Hi, everybody. My name is Kennedy Richardson. I'm from Cressy Commercial Real Estate, and today we have with us Brandon Demitruk from Teachers Credit Union. He is the Vice President of Finance and Facilities. Welcome, Brandon.
Thanks for having me.
Yeah, can you tell us a little bit about what you do in your role at TCU?
So in my role, my team manages the balance sheet, and a lot of that has to do with modeling and forecasting. We're also responsible for the annual budget. And then I have the facilities team that reports to me, which handles our entire branch network and the operations of those from a facilities perspective.
Okay, very impressive. So we want to get your input on investment in the baking industry, given that is kind of your expertise. So how do you think the pandemic has affected the investment in baking industry?
Well, really, as a service industry, we've had to adapt to the environment. Technology's played a larger role the past 12 months, and it's really, I'd say, expedited our member adoption of it for us. We've seen people log on to home banking at a higher rate than we have the last 5 years. We've also seen a shift towards the digital services with video conferencing and those types of services for our membership.
What are some more primary points of financial advice you would abide by during tough times like these?
I like to have a clear understanding of my personal expenses, that making sure I understand what are fixed expenses and variable expenses in case something unfortunate happens. If I lose my job, if something like that happens, my wife loses her job. So understanding that from a financial perspective, it allows you to understand where you can make cuts quickly that have an impact on your monthly budget and try to some of your cash flow.
And then looking more into the future, what is your forecast for this industry, specifically for 2021?
Within the industry, I think it's going to be a volatile year. I think we have a new president coming in, so we don't have a clear understanding of what policies are going to look like. It's going to be one that institutions now are flush with cash from a financial perspective. So banks, credit unions are sitting on a lot of cash due to the stimulus and consumers increasing their savings rate. So we're flush with cash, and then loan volume starting to slow down. If that doesn't pick up, you're going to see competition increase on the financial institution side, which will be good for borrowers, but not good for lenders. Or I'm sorry, good for borrowers, but not for depositors. The deposit side, you're going to see rates probably stay low for a while.
Okay, interesting. Well, those are all the questions I had for you. Very insightful. I want to thank you for your time today, and I hope you all enjoyed. Thanks, Brandon.
Thanks for having me. Appreciate it. Have a good day.
Yeah, you too.